for this paper? Dua September, hari apa tu? 2 September. Hari apa? What date? 2 September, jap saya tengok kalender. 2 September, 2 Februari. No, Tuesday. So bila you nak kelas recap? Your last paper before business valuation paper bila? That is on Saturday. 27 Januari hari Rabu. And then bila you nak kelas? 28, 29. Kan? Dua tarikh tu, okay. Susan, you discuss among yourself, you pilih date on 28 or 29, you want our recap class, ya? Susan baru masuk. Susan?
Yes, Doctor.
Susan, are you there?
Yeah, Doctor, I'm here. Yeah.
For recap class, and discuss on the examination paper, can you discuss among yourself and fix date? You want the class on 28 January or 29 January?
All right, Doctor. Is morning or afternoon, Doctor, you prefer? Or we fix the time?
All, because both day I'm free.
Okay.
Okay.
All right, Doctor. I will let you know later.
Okay. Okay, class, please don't forget to record your attendance. Sorry. Okay, first group, you can share your screen now.
All right, doctor.
Okay, first group apa? Where's the timetable lah hilang.
Top glove.
Top glove, ya. Okay, okay, you can get ready. Okay, I'll start recording now. Okay, please bear in mind you are given 15, yeah, 15 minutes to present and 5 minutes for Q&A. So we wait for another 1 minute. Cik Zul just WhatsApp me. He will join later. He's still at the clinic. Okay, first group, you may start now. All the best.
Okay. Okay, start now. Can you hear me, doctor?
Yes, loud and clear.
Okay. Assalamualaikum warahmatullahi wabarakatuh, and a very good morning to Dr. Zaira binti Yahya and my fellow friends. We are from Best Advisor Sdn Berhad who would like to present our valuation report on Top Glove Corporation Berhad. There are 4 persons will present this report today, which is me, Nurul Sali Zaidaya, Chai Swijong, Chiu Suching, and Lavinia Kalai Chelvan. Okay. The objective of this report is to estimate the market value of 100% of Top Glove Corporation Berhad as of 31st August 2020. And we were engaged by Mr. Lim Chiang Guan, the Executive Director of Top Glove, to issue a detailed report. This valuation purpose is for sales. To arrive at our conclusion of fair market value, we collected the company's relevant historic financial statements. And we will use 3 approaches, which is asset approach, income approach, and market approach. Okay, the company background. Top Glove is identified as Malaysian glove manufacturer who also specialize in face mask, glove, and dental dams and other products. Basically, Top Glove has 47 factories, 195 countries of export, and more than 2,000 customers. And the top 30 shareholdings is 1.44 billion ringgit, which is 56.35%. And Top Glove annual common stock was fluctuated in year 2015 to 2017. Besides, the business was founded by Tan Sri Lim Wee Chai in Malaysia in 1991 with 1 production line and a workforce of 100 people. As you can see, this is the management team of Top Glove, and it is led by the board of directors and followed by the executive committee and senior management team. Okay. Essentially, Top Glove has a few products that they produce, and the product fall under 6 categories, which is hand protection, includes the glove and disposal face mask, sexual wellness, dental care, home care product, and exercise band. Okay. In financial year 2020, the sales revenue of Top Glove fall under 6 product mix, The most revenue was come from nitrile product with 53% and followed by the latex powder free, surgical, vinyl, and TPE. Okay, next I will pass this presentation to Swijong.
Thank you, Saliza. So now I'll continue with Topless Swot analysis. So first is about its strength. First, it has a wide range of products like face mask, glove, and other rubber products, and it also has well-diversified exports such as to 195 countries. And it's also have automation and digitalization in their machinery, which will cause them to increase in terms of production. And they also really highlight in energy efficiency and water management, which lower down their costs. And they also have international and local award recognition. And next is about their weakness. Actually, Top Glove suffer relatively low occupational safety and health performance in last year. So this will actually affect their branding a bit. So next is about the opportunity. Actually, Top Glove is supported by government agencies such as MATMA, and they also have emerging market share in the glove usage in the worldwide, and the glove industry also have a steady growth in Malaysia, and the global expenditure of healthcare sector is also emerging. And lastly is about the recent COVID-19 pandemic, which caused the Top Glove to increase in their revenue. And last is about their threat. Actually, the foreign exchange rate is volatile, and because they use their revenue, they calculate their revenue in US dollars, so it's quite a threat. And of course, the US Customs and Border Protection also put a detention to Top Glove upon suspicion of the abuse of workers. And lastly is about the raw material, which the supply is inconsistent. Next. So regarding the current competitor of Top Glove, actually there are top 4 glove manufacturer in Malaysia, which is Top Glove, Hatalega, Kosa, and Supermax. But as we look through this table, we can see that Top Glove actually tops every category compared with other competitors. So for the current competitor, it's not a huge threat to Top Glove. As for the future competitors such as Luster Industry, Berhad, and Masing Group, because the entry barrier for this industry is high, and of course to catch up with Top Glove standard is quite hard. So we don't think that the future competitor can cause any huge threat to Top Glove in future. Next. So regarding the share price performance, there are a few highlights. The first is in July 2018, where there was a SPN legal affair. So the Top Glove tried to acquire SPN, which is a company, but they think that SPN is overvalued, so they are not satisfied with the amount. Therefore, this affair caused the share price to drop until as low as 8.47 ringgit. And another highlight is the very recent pandemic, which caused the Top Glove to continue increase in share price and reach their peak at 29.3 ringgit in 2020 August. Next. So there are some governmental or regulatory environment. First is regarding the Malaysian labor law. Actually, Top Glove was compliance with Malaysian labor law in terms of overtime, where they didn't force its worker into excessive overtime, which is 104 hours per month. And regarding the wage is Top Glove provide a basic monthly salary of 1,200 per month as compliance to Malaysian labor law. And they also implement zero cost recruitment policy, which the company will bear all the recruitment related fees for its foreign workers. And lastly is the US Customs and Border Protection, CBD, where they enforce the detention orders on subsidiaries of Top Glove, therefore stop the import of goods from this company. Next. So the key customer of the Top Glove is, first is North America, which is 22%, and second is Asia, but excluding Japan, which comes up with 19%. And the third one is Eastern Europe and Western Europe, both having the same percentage, 17%. And as for the supplier, actually the biggest supplier of top glove is actually the local one in Malaysia, which is up to 76%, followed by Thailand and 80%, and others as 4%. Next. So Togo also have their own supply where they acquire PT Argo Prama Sejahtera in Indonesia for their own rubber supply, and also Eastern Press Sendirian Berhad for their packaging material supply. Next. So regarding the marketing strategy, because Top Glove is already a very big company, so they have to the best marketing strategy is to merge with other big company or acquire other big company to have a big growth in short period. So of course they already have a huge customer base, so they need to take care of their customer relationship in order to have a long-term growth. Next. Now I'll pass to Lavinia regarding the business risk.
Okay, thank you, Swee Jong. So regarding the risk, it can be divided into 6. The first one is business. So this is acquired basically because Top Glove expanded to non-glove sectors, right? And then for the operational risk, it's something that cannot be avoided for manufacturing businesses. And then for the information system, it's because Top Glove wants to digitalize their operations. And so you will have issues like integration problems and also security breaches. The next is the financial aspect, where the main raw materials, which is latex, right, rubber latex and nitrile latex, have fluctuations in their commodity prices. And the next one is the human resources. This is what Top Glove is currently facing with their reputational risk. And the last one is the political, economic, environmental, and regulatory. This is due to it expanding to overseas borders. Next, please. All right, so for their current operations, as mentioned by Saliza earlier about their 47 factories and such, and also them going into the digitalization in order to maximize their productivity. They also have this integrated value chain. This is to transform their ideas into their products. And so the first one is product pipeline development, which is basically talking about their targeted acquisitions in order to enhance their potential. The next is manufacturing and supply chain operations. This is basically about their operational cost optimization. And the last one is commercialization. So this is where they promote their products globally, as they are very successful in doing that. Next, please. So for company expectations, Top Glove's personal goal is to reach a Fortune Global 500 company by 2025. And to do this, as you can see here, they need to grow by 20 times, generate USD 35 billion sales revenue. And from their 47 factories, they need to go to like 350 factories. And one important thing to note is COVID-19, as explained earlier. And it's expected that in 2021, it will still be a 25% growth, and post-pandemic, 15%. Next, please. So this is the general economic conditions and outlook. So this is just Malaysia's GDP, right, in 2020. So if you look first quarter to second quarter, there was a sharp decline because of COVID-19. And then you can actually see that it picked up in quarter 3. And this is actually because of, it's spearheaded by the manufacturing industry, which is where Top Glove is. All right, next. And if you look at the industry conditions and outlook for glove making, the demand has been so strong because of COVID-19. Magma says that it's estimated about 330 billion pieces of gloves was made in 2020. And the high reason for the demand, as you can see here, and it's also expected to continue to rise, like the 15% mentioned earlier, because of all these reasons here. There's also a talk of a new swine flu that may come up. So these are the reasons. Next, I will pass to Xu Qing to talk about our method of valuation.
Next, I'll be talking about the valuation approach used by to arrive to the fair market value of the subject company. We use the asset approach, income approach, and the market approach. First of all, explain the asset approach, where we use the adjusted net asset method and the excess earnings method. Firstly, we go and find the ratio for the trade receivables, cash over current liabilities, and the inventories. Then we find the median of the traceables and the sales revenue and get the PE ratio and get the median. Then we use the comparable 1, 2, 3, which is the industry median, and minus with the subject property median to get the normalized percentage, which are these 3 percentages to be applied in the balance sheet where we adjusted for the normalization. After that, to balance out the balance sheet, we will adjust the equities under share capital so that the balance sheet is balanced, that the total liabilities and equities is the same with the total asset. Then we'll get the revised net asset value, which is using the total asset minus the total liabilities to get 6.271 billion. And the number of shares outstanding is 2.7 million. Revised net asset value will be divided by the NOSO to get the RNAV per share, which is 2.32 ringgit. And the fair market value according to this approach is 6.271 billion. Then to valuing goodwill using the excess earning method, you identify the market rate of return, which is the billed ECC. And then you use the total asset, total liability, and the normalized net asset according to the value over here, times with the market rate of return to get normalized earnings. Then we will put the EBITDA from the subject company, average it to get the average target earning. Then we use the target earning minus the normalized earnings from here to get the excess earnings per year. Then times with divided by the investor rate of return, we'll get the value of goodwill. The fair market value according to this approach is 24 billion. Then we'll come to the market approach, where we need to calculate the PE ratio, PS ratio, and the EV over EBITDA ratio to get the value, the fair market value according to these 3 ratios. To get PE ratio, we use the EPS divided by market share price to get the PE ratio. For PS ratio, we use the market cap divided by the revenue sales, which is the PS ratio, at EV EBITDA. To calculate the EV, you need to add the long-term liabilities plus an MV equity, which is the market cap, minus cash and other non-operating assets. Then you use the enterprise value divided by the EBITDA to get the ratio. The same applies to the comparable 2 and comparable 3 in order to get the industry median. Then we'll use these 3 ratios to get the fair market value for these 3 ratios. Then we come to the income approach, which is the chosen method for our subject company to arrive to the fair market value. We will find the EBITDA from all 3 comparables, get the median, and then calculate the growth rate using the CAGR method. Then we'll get the industry median. The same applies to the Topless, our subject company, where we get the median of the EBITDA and then get the growth rate. However, for Topless, we use the CAGR from 2016 to 2019 because in 2020, due to the unexpected event of the COVID-19, the revenue and growth rate surged significantly. So if we take into account of this situation, it will make the growth rate to be not suitable because we are of the opinion that even after post-pandemic, the revenue of Topless is going to stay the same and it's not going to go back to pre-pandemic. Hence, we have to use the market rate of return based on the growth rate based on the normal situation. So we use the growth rate from 2016 to 2019. Then we'll apply then we'll find the median growth rate according to the industry median and the subject company, which is 6.49, which is applied to the DCF model over here. Then we apply formula to find out then we apply the EBITDA over here, and then find the formula and then apply formula to find the terminal value and the total. Then present value it back to 2020. Then we get the firm value, which is the fair market value according to income approach, which is 232 billion. In order to find the intrinsic value, which is the equity value, we have to minus the debt value, which is the total liabilities. Then we'll get the equity value, which is 230 billion. To find the intrinsic value per share, we have to minus the NOSO. We have to divide by the NOSO, which is equity value divided by NOSO, which is 84.98 ringgit. The market value as at 31st August 2020 is 26.28 ringgit, which means that this share is undervalued according to income approach. Saliza, can you present the slide again? Saliza?
Who control the slide? Saliza.
In conclusion, the value of the subject company Topless fair market value according to income approach is 232,712,436,000 only, while the intrinsic value of the company is 230,127,335,000 only. That's all from our presentation. Thank you.
Okay, any question from the other students? Nashan, do you want to ask anything?
No.
Okay. So, Dr. Zul, do you have any question?
Okay. So what is the method that you use as a main method to value your company, which is Topless?
We use income approach because Topless is an income producing company. So we have to use the income approach to value Topless.
Of course, most of the all of the company is income producing company because they are doing business. When they are doing business, of course they generate income. But what is your main justification of using income approach out of the other two approaches which is available to value this company? Because as you all aware, we have three different approaches which we may use in order to value, which is asset approach, market approach, and income approach. And then you just now presented all the three approaches that you use in valuing the company. But at the end, when you conclude the value of the company, you are using the conclusion based on the income approach. So normally when we are doing valuation, regardless whether it is business valuation or normal real estate valuation, you must have a strong justification on why you choose that particular approach to come out with your conclusion on the value for that particular company. So I would like to know your justification as why income approach is the best approach to be used in value Topless.
Okay, sir. So because our Topless is having a high increase so much in income during this pandemic, and this income is expected to continue to increase in the future because the pandemic is not going to stop very soon. Therefore, we think that income approach is the only approach that can really reflect the market value of Topless.
Lavia, do you have any idea on why you choose income approach out of the other two approaches?
Yeah, mainly that's the reason, because it's the best reflection in this case. Because if you look like the asset, like their demand has increased exponentially, but the asset that they need to acquire in order to carry out their business has not really increased. So the best one to really reflect it is their income, because they've now become such much bigger a brand because of their the kind of revenue that they're getting.
Saliza, why do you think that market approach is not suitable to be used to value this particular company?
Because I'm also with my group mate, we're choosing income approach because top line revenue will keep increase, especially during this pandemic.
The question is why market approach is not suitable. I know that you are using income approach based on the reason given by Lavia and Swijong, but I'm asking you why, in your opinion, market approach is not suitable.
Because the other company size is small and cannot compare with because cannot compare very accurately.
Cakap je, your comparable are not similar to the subject.
It is uncomparable because in terms of size, in terms of the revenue, everything, it clearly shows that Top Glove is
the top
above all of the competitor. Okay, I have no more question.
Okay, if no more question by the students, we move to the second group. Please stop presenting. Second group, you can share screen now.
Thank you, Doctor.
Welcome. Yeah, very good.
Doctor and Sazu, can you see my screen?
Yes.
Yes.
Oops, I forget to cover my camera. Okay, Doctor, may I start?
Yeah. Please
Yes,
start
you
now.
may start.
Assalamualaikum and good morning to Dr. Zain and Sazo. We are from Gloria Info International Property Consultant. Today we will make a presentation of business valuation for telecommunication. Before we start our presentation, I would like to introduce our group member, me, Amira Lishna, Teshuzan, Okani, and Vichin. So our subject company is DG.com Berhad. Next. For purpose of valuation, we, Gloria and Co. International Property Consultant, were appointed by DG.com Berhad to ascertain the intrinsic value of the subject company for sale purpose. The date of valuation is on 3rd November 2020, and this report does not include current COVID-19 pandemic situation into the valuation. Next. For subject company background, DG is a leading mobile communication company that have 26 years experience in telecommunication industry. DG also the first digital mobile communication service offering in Malaysia. The core business of DG.com Berhad is to provide telecommunication services. Its financial year ended at 31st December every year. The comparable for the comparable company for our subject is Telecommission Berhad, comparable 1, Time.com Berhad as a comparable 2, and Redfin Berhad as a comparable 3. Next. Malaysia Economic Outlook 2020. On the first quarter of 2020, Malaysia economic condition indicated a gloomy performance due to spread of COVID-19 in 210 countries. The second quarter of 2020, a lot of Malaysia economic activities are affected by implementation of MCO, CMCO, and RMCO. For the third and fourth quarters, GDP annual growth rate continued to be negative and high unemployment rate occurred due to the COVID-19 pandemic. Telecommission industry outlook. All the major 2G and 3G platforms are expected to be shut down by the end of 2025, and by 2029, the majority of mobile connection will be on 5G. So based on the graph sourced from MCMC, it shows that the 4G mobile subscription recorded 71.8%, which is much higher than 2G mobile subscription that is only 12%, and 3G mobile subscription that is 6.2% in the first quarter 2020. This figure is expected to increase further in the second quarter 2020 due to people being instructed to stay at home during outbreak of COVID-19. Next. The telecommunications sector has witnessed growth in weekday viewership, movie rentals, and purchases. The need and demand on internet was greatly increased during first quarter 2020. Live viewing is increased by 50%, and free video on demand is increased by 25%, as more people are locked down and staying at home. Next. So, however, based on this figure, it shows that both penetration rate of broadband and mobile cellular in Malaysia decreased slightly from 131.7% to 127.4%, and from 135.4% to 133.6%, respectively in the first quarter 2020. On the other hand, fixed telephone and pay TV underwent an increased penetration rate from 90.7% to 19.8%, and from 86.4% to 87.0%, respectively in the first quarter 2020. So next, I will pass the presentation to Kitchen.
Thank you, Anya. Now I will go to present the vertical common size analysis. In the bar chart, we can see that such a company have the higher total liability, which occupies 19.32% of total equity and liabilities, while the total liabilities industry only occupies about 57.28% of total equity and liabilities. Relatively, the total equity of such a company is 9.68% and the industry is 42.72%. So it shows the such a company has higher debt compared to industry. Next, I will go through the horizontal common size analysis. Such a company is having an average of negative 2.26% change in their revenue from 2015 to 2019. But the change of revenues in industry is positive, which is 6.87%. To compare between total assets and total liabilities, both of them are having increase in average change on such a company and industry. The average change in total assets and total liability of such a company is more than the industry. Next. I will explain about the financial ratio. First is the gross profit margin. Gross profit margin is a profitability ratio that measures how efficiently a company use its materials and labor to produce and sell products profitably. The gross profit margins of such a company is more than industry average, which is 1.25 for such a company and 0.86 for industry average. This shows the such a company produce a sales its products efficiently compared to the industry. Second is debt to equity ratio. Debt to equity ratio is liquidity ratio that compare a company's total debt to equity. Such a company debt to equity ratio is 9.48, which is more than industry average. It shows the such a company has a higher debt to equity ratio, which is considered more risky to investor than industry with a lower ratio. Third is return on equity. Return on equity is a profitability ratio that measures the ability of a firm to generate profit from its shareholders' investment in the company. The average return on equity ratio of the such a company is also greater, which is 2.75 compared to the average of industry, which is only 0.06. It is indicating the such a company is more capable to get a return on their investment than the industry. Fourth is current ratio. Current ratio is show the capability of the company to pay off its current liability use its current asset. The current ratio of the such a company is 0.68, which is lower as compared to the industry average of 1.77. This indicates that the company only has enough current assets to repay 68% of its current liability and half of current asset compared to the industry. Fifth is equity turnover ratio. Equity turnover ratio is a ratio that measures the proportion of a company's sales to its shareholder equity. The subject company has recorded 11.5, which is much higher as compared to the industry average. The ratio as high as 11.5 is not good because it shows the company has higher percentage of debt compared to equity in its capital structure. This is risky since companies would end up taking a bundle of too much debt and they would have to pay their debt with higher interest amount. Now I will pass to Susan to continue.
All right, thank you, Kichin. So I will explain about the valuation approach. To value the subject company, there are three valuation approaches have been adopted. So the first one is the asset approach. For this approach, there are two different methods. The first one is the adjusted net asset method, and the second one is the assessed earnings method. Next. First of all, I will explain about the adjusted net asset method. Next. All right. So for this method, we have analyzed the trade receivables to sales ratio and the cash to current liabilities ratio of the comparable companies and the subject company based on their past 5-year records. And through this analysis, we calculated the median of each of these ratios in the telecommunications industry, which is shown in the red box. Next. And we found that there are 16.32% difference in terms of the account receivables to sales ratio between the industry and the subject company, whereas 38.3% difference for the cash to current liabilities ratio. Next. And based on this, we have adjusted a positive 16.32% on the trade and other receivables and 38.3% on the cash and short-term deposits on the balance sheet of the subject company as shown in this slide in the red box. And next, so the total adjustment of 48.7% is then made on the share capital, as shown in the red box. And finally, the adjusted net asset value is about 1,034,666,000 ringgit, whereas the intrinsic value per share is 13 cents. Next. So now I will explain about the excess earning method. Next. So this method, there are 6 steps. And the first step, we determine the market rate of return, which is also the WACC. And based on our calculation, the rate is 9.53%. For step 2, the difference between the adjusted value of the total asset and the total liabilities is multiplied with the market rate of return to get the normalized earning as shown in the red box. And for step 3, we estimated the average earnings of the subject company based on their profits of the past 5 years. Next. So for step 4, we find the excess earning by using the targeted earning to deduct the normalized earnings we calculated in step 2. And then the excess earning is then multiplied with the investor rate of return at 20% to estimate the value of goodwill. And finally, we sum out the adjusted value of the asset with the estimated value of the goodwill to achieve the full market value of the subject company, which is 8,347,074,000 ringgit, and the intrinsic value per share is 1 ringgit and 7 cents. However, in our opinion, the subject company does not own much asset, like explained by my group mate Kichin before, as shown in the current ratio, which the company is having much lower current ratio compared to the industry. Therefore, the subject company is not an asset-based company and their sales do not rely much on the asset they own. Therefore, in our opinion, it is inappropriate to use the asset approach to determine the full market value of the subject company because this will lead to undervalue. Next. Now I will explain about the income approach. So for this approach, the DCF has been adopted to achieve the market value of the company. Next. First of all, we analyze the compounded annual growth rate, CAGR, of the comparable companies in terms of their earnings before interest, tax, depreciation, and amortization, which is the EBITDA. And based on our finding, the CAGR of the telecommunications industry for the past 5 years is 5.08%, whereas the CAGR for our subject company is negative 2.55%. Like mentioned by Kitin in the CSA part, the company is having the decreasing earnings every year. So next, we projected the future cash flow of our subject company for the future 5 years with the CAGR of 5.08% in the DCF. And for the 6th year onwards, we projected the terminal value of the company with the long-term growth rate of 3.7%. And then the future cash flow is then discounted back to present value using the rate of WACC of 9.53%. And through this DCF method, the market value of the subject company is 39,428,119,000 ringgit, whereas the intrinsic value using income approach is 4.11 ringgit. In fact, based on our opinion, the valuation of subject company using income approach is inappropriate because, like mentioned before, the subject company is having a negative CAGR, which is negative 2.55 for the past 5 years. And this means that the earnings of the subject company is decreasing year by year. However, in the DCF, we assume that the subject company will continue to have a positive growth rate of 5.08% each year. And this is not suitable, which in turn will lead to the overvaluation of the subject company. So that's all from me. Now I would like to pass to Ain'ni to continue. Thank you.
Thank you, Susan. So market approach is a type of valuation method to obtain the value of business, ownership interest, security, or intangible asset by comparing the business to other similar business. We adopt comparative transaction method to value subject company. Under market approach, we utilize price to earning, price to sale, and enterprise value to EBITDA to value Digitalcom Berhad. The table below shows the fair market value of each multiple. The fair market value we choose under market approach is PS, fair market value. I will straight away to explain the reason. First, comparable one, Telecom Malaysia Berhad is getting negative income in 2018, making its PE ratio in 2018 is extremely high. Besides, comparable 3, Redtone also getting negative income in 2016 and 2017 due to delay of major project, impairment on non-trade receivables and losses in China operations, making its PE and PE multiple incapable to reflect the actual situations in the industry. Its PE and EBITDA multiple unreasonable to be used to reflect the actual situations, mainly because of its bad performances of the comparable company. Hence, PE multiples fair market value is chosen because it is more suitable to compute equity value for telecommunication industry were likely to have inconsistent profit. It is also not as volatile as PE multiples, making it more reliable in valuation method. Table below shows the summary of value for each approach for our subject company, Digitalcom Berhad. Based on the explanation by me and my teammate just now, the fair market value of subject company under market approach, which is the PS ratio, is selected. Hence, the fair market value of Digitalcom Berhad is say 36,100,000,000 ringgit Malaysia, and based on the fair market value, the intrinsic value of Digitalcom Berhad is 4.64 ringgit per share. That's all from us. Thank you.
Class, any questions you want to ask?
Groups. What is your the final approach that you use in valuing the company?
Is market approach, and we choose PS ratio.
Why market approach is the best?
This is because market approach is more suitable for telecommunication industry, where it is likely to have inconsistent profits among the comparable companies.
Do you aware that one of your comparable or comparison is we can say it is uncomparable, because even though the industry is within the same industry, which is telecommunication, but if you look at the detailed nature of business between TM and the other company that you use in your comparison, it is totally different, because for TM, their main or their main business is the line, landline, whereby if you look at your subject property, which is DG, director, their main business is on mobile punya line. So I think in terms of comparison, we can say that the telecommunication is not the best comparison to be used to value your subject property, which is DG. And then one more thing is, if you look at your financial ratio analysis, your financial ratio analysis looks funny. Because at one time you reported that the subject company suffer from a high loss. The average loss is negative 2 point something, but you get a positive gross profit margin, you get positive current ratio, you get a very good positive return on equity as compared to the industry, which is
Sir, I have to clarify on this. Because
you scroll back to the ratio, show the slide. Okay.
Next one. Because the company negative 2 point something, the one is the growth rate, negative growth rate. They are having positive income, but the income is dropping year by year. That's why they are having a negative 2 point something percentage. The percentage actually does not mean that the company is having loss. Just that
look at your debt to equity ratio. Your company is 9.48. What does debt to equity ratio means?
Debt to equity ratio actually means comparing debt to the equity in the capital structure of the company. And then our subject company is having very high debt compared to their equity. Their debt is almost 90% and their equity is just 10%. That's why the ratio is very high compared to the industry. Whereas for the equity turnover ratio, because the sales will be divided by the equity, since the equity is very low in our subject company, the number we divide is very small. That's why the value for the equity turnover ratio will be extremely high compared to the industry. And then this is not a good sign actually, because it shows that the company is having higher debt, and then this will be risky for the share for the investors.
I mean, look at your current ratio. Do you have the details of the total asset, total current asset as compared to your total current liabilities?
Yes. Can you show the?
Because your financial analysis looks a bit funny. It's not. I think something goes wrong somewhere, because maybe you are not pay attention to the details when you are doing your financial ratio analysis.
Sir, but in fact, DG is really having very low asset value. This can also be shown in the asset approach. That's why the total current asset is quite low. And then the ratio is much lower compared to the industry.
Yeah, but you look at the current ratio. Current ratio is the portion of your current asset as compared to your current liabilities. If you say that your current asset is low, and then if your current liabilities is high, normally the current ratio will come out negative or at a low rate. I'm not sure on your data. It's all right. Just proceed to the next question. About the comparison, do you have any justification as why you choose Telecommission as one of your comparable in valuing DG?
Because in our opinion, the others comparable, their performance is quite not unstable. Sometimes they lost very much, and then sometimes they gain a lot. That's why we not able to choose.
If the other company is unstable, it is your task to do the analysis. You cannot just simply take a comparable which is stable from your point of view, but the nature of business is different. Because if you look at the nature of TM and the other telco, it is totally different.
All right.
Same like when you are using a comparison method in valuing, let's say, double story terrace. Because the rule of thumb of comparison method is you have to choose as similar as possible to avoid from having a huge adjustment. Because when you do adjustment, it is based on your assumption, based on your prediction. That's why in reality, based on the rule of thumb for comparison method, we will try to get a comparison which is as close as possible to your subject. So you need to think carefully on the type of company that you choose as a comparable.
Okay, so we admit this.
Yeah, because if you are doing the real case out there, you might end up having sued by the client because you are using the unrealistic data and comparison. So you need to be very careful. I have no more question.
Any other question from the students? Okay.
You see a student. You see students that even the most experienced value out there, not every one of them are brave enough to do these business relation cases. But since we introduce this subject to you guys, so we want to give you sort of exposure on how the business relation looks like when you are practicing out there. In fact, in the reality, a junior valuer out there will not have the opportunity to do business relation. So far, I know the most experienced business relation yang valuer yang buat is Mr. Elvin Kong and Jaafar. And that some of the cases is done by accountant, or in some cases by legal practice firm when it involve the intangible asset. So it is very very subjective punya but still you have to be very careful.
Okay, Suzanne, okay?
Okay, Dr. Su, do we need to make correction or amendment on this, or we just...
If you still have time, because you have to present the data which is logic, kan? If the data in your report is unlogic, and then it will reflect your marks later on.
Suzanne, do you have other comparable which you think better than telecom?
Not sure, because we have studied before in the beginning of this assignment. The other comparables, sometimes they involve overseas business, which is also not suitable.
Not suitable, it's different market.
So
Suzanne, just put it like this. If you cannot find any other replacement for Telecommission, just take Telecommission. Two comparables is more than enough for this exercise. What is important is how you analyze their data.
yeah, we will take note of
Telecommission
this.
definitely is not suitable as your comparable because the nature of the company too.
All right.
Okay.
All
Is
right.
that
Thank you.
okay? Thank you
Thank you,
to
Doctor.
group 2.
Thank you, Suzu.
Okay, well
Thank you,
done.
Doctor. Thank you, Suzu.
Walaupun
Why?
there is mistake there, I think you have done a good job. Okay, we move to group number 3.
Apologies, Kaini, but can you stop presenting? Can you see my slide, Doctor? Good morning, Doctor. Can you see my slide?
Yeah.
Let's begin now.
Okay, you may present now.
Assalamualaikum and good morning to our fellow lecturers, Dr. Zahiri Yahya and Sir Zulkifli bin Syah. Introducing my group mates, Muhammad Ikhwan bin Zulkifli, Nur Syahira binti Muhammad Kamal, Hasan Kubar Nadaraja, and me, Nazhan Syafiq bin Muhammad Isham. Okay, now our valuation firm ABC Valuer is going to present about our company, Tambun Indah Land Berhad, for our valuation dated 6th of November 2020 for the purpose of sale. Next. Now is our company identification, nature and history of the company. So for our company, Tambun Indah Land Berhad is a public limited liability company. And it is also a property development company with a portfolio of business segments, mainly in the property development and management. And it also provides in-house quality assurance and control team that provides an extra quality safeguard. And it has also a diverse insight of the home ownership market. Next. This is our management team for board of directors. This is our senior management. I'll pass the slide to Shira.
Alright, thank you, Nazhan. Next, we will look at the product and service information of Tambun Indah Land Berhad. The first one is property development. It is involved in gated and guarded residential, which are Palma Residency and Permai Residency. Also, landed residential, which is Begonia Villa. Meanwhile, Per Evergreen and Per Saljana Permai are both high-rise residential. Next is property investment. GEMS International School is an international education institution that provides high-quality education for over 50 years, has an enrollment capacity of up to 1,500 students. Perth City Mall represents the first stage of integrated development located at heart of Perth City. And its second investment is Jessel Ball Sports Centre. The third one is construction. Its business in construction consists of construction of residential, commercial, and industrial building properties. Next. Then we are going to take a look at Tambun Indah Land Berhad market analysis. It is a 12-month earning from December 31st, 2019 of 49 million, but has declined by 12% compared to 2018. And for 2020, taking COVID-19 pandemic into account, the earning of Tambun Indah Land Berhad has declined by 25% from year 2019. Furthermore, for this one-year growth rate has been lower than its average earning growth rate over the past 5 years of negative 16%. This indicates that rate which Tambun Indah Land Berhad is growing has slowed down. So in addition to that, to further compete in the market, Tambun Indah Land Berhad sole project launched this year called MD Park recorded a slow take-up at 19.6% at the end of June, but sales have picked up a bit post-lockdown. I will pass the screen to Ikhwan.
Now we
present to you the stock classes and ownership of Tambun Indah Land Berhad. The numbers of shares.
Iqbal, your voice is not clear.
Not clear. Okay. Hello, can you hear me? Can okay no? Dengar tak?
Boleh dengar, but not clear. Tapi just proceed.
Alright. Okay, thanks to Shahira. Now I will present to you the stock classes and ownership of Tambun Indah Land Berhad. The numbers of shares outstanding (NOSO) for this company as December 2019 is around 433.5 million. Serum Permai Sdn Berhad is the largest shareholder of this company with 32.95 shares, and there's also the directors or shareholder. Next. So for business risk and operation. Currently, the company is subject to market risk inherent in property development. These include changes in government regulations, financing policies, rising cost of living, and adverse changes in property market price. The company is also exposed to low demand for residential properties arising from the overhang in the property sector. To mitigate this risk, the company continue to offer a variety of property types at affordable price in order to meet the requirement of the market and regularly conduct market research to understand the market dynamics so that the products roll out are at the right offering. The company also adopts a prudent approach towards a cost management to minimize unnecessary cost leakage. A tendering system is adopted to ensure construction contracts are competitive. Also, the company has maintained an excellent working relationship with local suppliers and contractors to ensure sustainability. Next, I will pass the presentation to Nazhan.
All right, thank you, Ikwan. So now I'm going to present about the general economic condition and outlook. So now we can see Malaysia economic growth 2019 has the GDP growth of 4.3%, where it slowed down to 3.6% at the fourth quarter. And this is supported by the services sector and the manufacturing sector. Next is the interconnection between consumption and production of goods and services, where household consumption reduced in petrol, travel, recreation, and outside food consumption, which has directly affected industries related to food and beverage, accommodation, transportation, sport, and recreation. Besides, we have also recession phase, where the global pandemic COVID-19 outbreak in March 2020 has affected almost every sector throughout Malaysia. And this also brings to job losses, which increased by 42% in the first quarter of 2020. Next. Now is our economic performance for the first quarter of 2020. The first one is the services sector growth, which has been continued to be the first impetus with a growth of 3.1%, and then followed by the manufacturing sector, which has a slower growth of 1.5%. And this is the lowest growth attained since quarter one of 2013. The next one is the mining and quarrying sector, which has a smaller negative of 2.0% due to the improved production in crude and condensate and natural gas. The next one is construction sector growth, which contracted to 7.9%. And this is the lowest growth since second quarter of 1999. And then the final one is the agriculture sector's growth, which decreased due to the decline in oil palm, forestry, and logging, fishing, and rubber. Next, I'll pass to Vas.
Right, thank you very much, Nasan. So in terms of the industry outlook, first of all, in terms of the overall residential property market in Malaysia, which is Tambun Indah Land Berhad's main market, core business, there was a 3.3% overhang increase in the first half of 2020 across Malaysia. The overall property transaction in the northern region, mainly Penang, Perak, Kedah, and Perlis, where Tambun Indah Land Berhad operates, there was a decrease in transaction worth in the property market of 22.4% and a decrease in volume of 20.3%. So in terms of the Penang residential market, specifically where Tambun Indah Land Berhad has most of their properties, they had dropped in transaction value by 31.7%. However, Penang and Perak are some of the states that are expected to have the highest rebounds over the next 2 years. So next, I would like to pass on to Shira for the summary of income statement.
All right, thank you, Vasan. So this is our summary. This is Tambun Indah Land Berhad summary of income statement for 5 years. Next. So we have adjusted by removing its total of other comprehensive income as it is non-recurring in 5-year income statement. And then second adjustment is profit attributable to owners of the parent and non-controlling interest are removed as subject company is value in terms of earnings. By excluding this minority interest, an analyst is able to to better understand what income shareholder has to claim on. If the minority interest were included, the net income figure will be overstated. Then amortization charge is included as an essential to account for decreasing value of its asset over time. This is the look of our income statement after normalization is made. The normalized income statement provides the investor or lender with a clear picture of the actual expenses or revenue of the company during the 5-year period. I would like to pass the screen again to Vasan.
Right, thank you very much, Shira. So first of all, this is the 5-year historical balance sheet of Tambun Indah Land Berhad in the years of 2015 to 2019. And in making the balance sheet adjustment, we have had to make several normalizing adjustments. So first, from the top right of use assets, it was an element that only appeared in 1 year, so we simply removed it. So for inventories, what had happened was previously land held for property development was an element in the balance sheet, but in the years of 2018 and 2019, it was removed and placed under inventories. So we simply reclassified it. And next up, in the current assets, for inventories in the current assets, 2 different normalizing adjustments had to be made. First of all, for the years of 2018 and 2019, the property development costs were included under inventories only for those 2 years. So we simply reclassified them. And the second adjustment you see here is actually in terms of the industry median, which I will show in the next slide. So in terms of trade and other receivables, again, it was classified as part of trade and other receivables was classified as contract assets in 2018 and 2019. However, in the other years, contract assets were under trade and other receivables. So we simply reclassified that. In terms of the cash and bank balances, we normalized them in terms of the industry median. And for the liabilities, the lease liabilities, both in the non-current liabilities and the current liabilities were only an element that showed up in 1 year. So we removed them from the balance sheet. And the adjustments for reserves were to balance of the balance sheet, balance of income, the statement. And also again to the total equity and liabilities to balance it off. So this is the normalization that we did in terms of the inventory and cash. So our comparable 1 is Oriental Interest Berhad, comparable 2 YNH Property, and comparable 3 is UOA Development Berhad. And with that, the industry median was obtained and then normalized. So here is the normalized balance sheet, where after the adjustments were made, they were simply added on to the audited balance sheet. So next is the business versus industry common size analysis. So if we look at the common size analysis, the net income is expressed as a percentage of total sales. All elements in the assets is expressed as a percentage of total assets. And for all elements under equity and liability, it's expressed as a total percentage of total liability and equity. So what we can see is that in terms of the income, the business actually has a higher net income than the industry, and it has a higher total current assets as well, whereas the industry has a higher total non-current assets as opposed conversely. And in terms of liabilities, the total current liabilities of the business in the Land Berhad is significantly lower in percentage of the total equity and liability as opposed to the industry, and slightly higher in terms of the total non-current liabilities. So next, in terms of the business versus industry financial ratio analysis. So in terms of the activity ratio, which measures the efficiency of a company in leveraging its assets on the balance sheet to generate revenue, the business is actually higher than the industry in all 3 ratios, which shows that it is slightly more efficient in leveraging its assets on the balance sheet to generate revenue. In terms of the liquidity ratio, again, all 3 of the liquidity ratios are higher for the business, showing that the business, Tambun Indah Land Berhad, is more adept than the industry at meeting its short-term obligations. In terms of the solvency ratio as well, with the lower solvency ratio, they're more in a position to meet their longer-term obligations. And in terms of all the profitability ratios, again, Tambun Indah Land Berhad has a higher profitability ratio than the industry. This is despite the fact that they actually have a fall in revenue. Tambun Indah Land Berhad is actually falling in their revenue. So next up, I would like to pass it on to Shira for the asset approach.
Thank you, Vasan. For next. Okay. Normalization adjustment yield has been made to the calculation of asset approach to normalize its earnings normalization of trade receivables is done at 97% and cash is done at 71% to understand the company true earnings from its normal operation. This adjustment gave total asset value of 769,314,853 ringgit. Next. No adjustment is made on the liabilities and equity. The parameter for normalizing the percentage is between three comparable companies, which are the Oriental Interest Berhad, Y&H Property, and UAE Development. Next. And then the firm value of Tambun Indah Land Berhad is estimated to be 580,180,706 ringgit, with an intrinsic value at 1 ringgit 34 cents per share. I will pass the screen to Ikwan to continue.
All right, thank you to Sheikh Shahira. Now, let's take a look at income approach, discounted cash flow method. Next. First of all, we have measured the industry growth by observing three comparables, which are OIB, Y&H Properties, and UOA Development. From that, we get the industry median growth per annum is 24.62%. However, the growth of subject company also needed to be considered for such valuation. Currently, the growth of subject company is not stable, so we have taken the growth of industry together with the growth of the company and came out with 0.41% growth rate for DCF method. Next. So this is the assumptions before proceeds with DCF, where the NOSO, the WACC of 8% obtainable from reliable website Guru Focus, and the risk-free rate such as the government bond, which is 2.6% obtainable from BNM. Next. All right, first thing first, we value the company using the EBITDA of the company, and also we forecast for 6 years. And at year 6, we will have the terminal value. And in year 2021 onwards, we have applied the present value to the EBITDA using the WACC as the discount rate. Finally, we total up the value to reach the 1.077 billion ringgit of the firm value. In order to get the intrinsic value, first we need to deduct the debt value obtainable from the company's balance sheet, and the equity value divided by the NOSO and get the RM 2 ringgit 05 cent intrinsic value. Comparing with market share price, we can say that the income approach used here is undervalued. Next, I will pass to Vas for market approach.
All right. So in calculating the opinion value for the market approach, we have adopted two ratios, which is the PS ratio and the EV/EBITDA ratio. So in obtaining the PS ratio, first the market cap must be calculated, which can be obtained by multiplying the NOSO from the balance sheet and the share price, which is available through reliable online sources such as KLC Screener or Yahoo Finance, and thus by dividing the market cap with the revenue, we get the PS ratio, and then the median is obtained. For the EV/EBITDA, the EBITDA can be obtained from the from the statement of cash flows, and the EV is calculating by adding up the MB equity, which is the market cap, the debt, and deducting cash and other non-operating assets. The EV is then divided by the EBITDA to obtain the EV/EBITDA ratio, and the median is obtained. So we've done this for all three comparables, which is comparable 1, comparable 2, and comparable 3. So finally, we find that the industry median for PS ratio is 2.01, and the industry median for EV/EBITDA is 6.27. So our opinion of value from our full market value from the PS ratio is 500. So once we obtain the median PS ratio, we multiply it by the revenue to obtain the full market value of 557,117,263 ringgit and 68 cents. And from EV/EBITDA, the obtained EV/EBITDA is then multiplied by the median EBITDA from the subject company, which gives us a full market value of 694,446,967 and 83 cents. So next, I would like to pass it on to Nasan to conclude our presentation.
Thank you, Vas. Now, this is our opinion of value. For the income approach, is not chosen due to the uncertainty surrounding both the business and industry, where the industry is growing but the company is declining. Therefore, the most suitable approach to value Tambun Indah Land Berhad is the market approach, where the EV/EBITDA valuation multiple is adopted. Therefore, our fair market value is 700 million. That's all from us. Thank you.
Okay, thank you. First thing is there is no such a public limited liability company in Malaysia, because public limited company is already known as a limited liability. So you stated, you mentioned in your first slide, your company is public limited liability company. So try to Google type of business entities in Malaysia. There is no such public limited liability company. It's public limited company. And then it is well known that public limited company has limited liability as compared to sole proprietorship and partnership, which has unlimited liability. Then what is your main approach?
The market approach, Doctor.
Market approach. Why market approach?
Because with the income approach, there's a few uncertainties. Mainly that the industry has a growing AAGR, but the company, even though that their financial ratios are better, they actually have a declining AAGR. We're not sure. The reason might be because they are restructuring their operations or whatnot, so we cannot approach the use the income approach.
Can you go back to your comparison slide?
The market approach, Doctor.
Yes. Which company are you using as your comparable?
For the PS ratio, it was YNH Property, and for the EV EBITDA, it's OIB.
Why you are using different company, different comparison for PS and EV EBITDA? What is the logic behind?
Because of the median PS ratio and the median EV EBITDA. We obtained the
because of just simply like that, just because of the median tu, you choose a different comparable for different apa ni? Is it correct? Can you do that in reality? In reality, can you do that? Can you use two different comparable for apa ni?
For different
yes or no? Can you use two different comparison for two different ratio ni?
Apologies, Doctor, but in reality, I'm not really sure.
Yeah, you have to go back to the basic principles. Is it allowable to use two different comparison for two different ratio ni?
I would assume not, Doctor.
What's that?
Then why you use?
What company you have for the comparison?
Oriental Interest Berhad is a comparable one. YNH Property is comparable to, and UOA Development Berhad is a comparable 3.
Okay, among the three, which one is the best?
In terms of the market cap, I think you could say YNH Property is the best.
Why?
Because it has the most similar market cap to our subject company.
How about other factors? You only pick on one factor because similar market cap, right? So how about other factors?
We also just made sure that they were within the same industry.
Same industry. How about location?
Location, not really, Doctor.
Wasan and the group members, the rule of thumb for using comparison method, as I mentioned to the previous group, you have to choose the comparison which is close enough to your subject property, regardless whether it is a market cap or location or size of the company. So when you have chosen the three companies, so we assume that the three companies is the best in terms of all criteria, which is close to your subject property. So when it is differences between the subject and the comparison, so then you have to do your adjustment. So by right, in all of your analysis, you should use all three comparison and do the adjustment to apa ni lah, to suit with your subject property or subject company. You cannot take one company for one analysis and then the other company for an analysis which is not apa ni. So even though we are valuing a business, but when it comes to the approaches used in value the company, you have to go back to the basic principle of using the approaches. If it is a market approach which is comparison, you have to go back to the basic principles of comparison method, which you have learned in your first, second year tu. So dia punya tu, the basic principle is apple to apple.
Do you understand what the surveyor Zul want to tell you? Actually, you have to analyze all the three comparison, not just choose one. For what you do now, you say for the first ratio, you just want to take comparable one. For the second ratio, you want to take comparable three. Tak boleh, ya? You have to analyze and do adjustment for all three. Like what you did for property valuation last time.
And then the other thing is, before we conclude for your group ni, what is the normal wording reported in a business valuation report? They don't put opinion of value. In real estate valuation or property valuation, yes, you put opinion of value and then you round down the value. But what is the wording used for business valuation report? They don't use opinion of value. So look at the format, the wording used for business valuation reporting purposes.
All right, Doctor.
I have no more question.
Okay, any question from the student? If no, we just move to the last group for today. By the way, very good attempt.
Actually, what you have presented so far, it is very good, because we know that we teach you the basic or introduction to business valuation. That's why we are not going to ask in details the details of the valuation too, but the general format, the general principles, still you have to get it correct. Like the basic principles of using market approach, income approach, asset approach, it has to be correct. Ini kita tak pergi detail lagi tau, yang you buat detail untuk business valuation, because we know that it is not your apa ni, tapi kita give you some introduction to business valuation on how basically we do a business valuation. Kalau kita hentam lagi detail lagi, you tak boleh jawab. So that's why kita tak pergi sangat very detail on your detail calculation, on your detail apa ni tu. Kalau you tengok in principles, the general principle in doing business valuation, yes, you have to consider all three approaches, but at the end you have to use the best approach in valuing the company. Tapi tak apalah, ini as a basic you need to present all the three approaches that you apa ni. Tapi kalau di luar praktis sana, dia akan guna satu approach saja yang the best, yang untuk dia value tu. Tapi before choose the best approach, you need to consider all approaches. Okay, next group. Saya hari ni lepas ni kelas 2 sampai 4 tu, 4 sampai berapa nanti meeting jabatan lagi, so tak.
Zul, meeting jabatan dah ada link ke? Belum kan?
Belum lagi. Because I have class with first year.
Okay, last group please. Continue.
Nampak slide tak, Doktor?
Nampak, okay. Slideshow. Go to slideshow.
Assalamualaikum and very good afternoon.
Waalaikumsalam.
Zahidi Abid Yaya and also Surveyor Zulkifli bin Echa. My name is Muhammad Faikmal and here is my fellow colleague Muhammad Fawaz bin Muahir, Nur Izwani binti Fahrul Rudi and Puah Wei Chi. We are from Ernest Valuation Advisory, going to present our valuation report on Daya Materials Berhad. Okay, subject of valuation is a Daya Material Berhad. Our purpose of valuation is to determine the fair market value of the company for the sale purpose, and date of valuation is 20th November 2020. Now I will pass to Fawaz for the next.
Okay, thank you, Faikmal. Now I will continue on the vision and mission of Daya Materials Berhad. Their mission is to establish Daya as the supplier of choice for the regional oil and gas industry. And their mission is to become one of the top 5 oil and gas players in the domestic market 2025. Next. This is Daya Materials Berhad company background. It was founded in 1994 in Penang, Malaysia. It started out as a pioneer in the domestic specialized polymer compound industry, and they have become the public listed company in July 2005 with aim building a platform for us to realize their ultimate vision to be a major oil and gas player. Next. As you can see, this is their board of directors. It's led by Datuk Lim Tian Chiang, the non-independent non-executive chairman. Next. The two cooperating business units for Daya Materials Berhad are oil and gas and technical services. Under oil and gas, firstly, oil and gas chemical is carried out by Daya Academy Sdn Berhad DSSB. It involves in the complete logistic, trading, distribution of specialties, chemical and catalysts. Secondly, engineering, construction and maintenance services is carried out by Daya OCI Sdn Berhad DOCI. It involves engineering and construction for the onshore and offshore services such as air conditioning, mechanical and ventilation services. Thirdly, upstream services and products is carried out by Daya Mexico Sdn Berhad DMEX. They are specialized oil field service provider for well intervention, visual analytics, pipe recovery, and abandonment in oil and gas upstream globally. Next. Lastly, under technical services, engineering and construction is carried out by Daya CMT Sdn Berhad. They offer a wide range of services including design, engineering, construction, project management and maintenance and management of commercial and industrial buildings and facilities on a single source platform to a wide range of industrial clients. Next. Okay, these are the comparable companies for Daya Materials Berhad. Comparable 1 is Karimin Petroleum Berhad, comparable 2 is Petra Energy Berhad, and comparable 3 is Rich Energy Berhad. The revenue for subject company is around 293 million ringgit. For comparable 1 is around 373 million. For comparable 2 is around 575 million, and the revenue for comparable 3 is around 170 million. All of these data are collected on the financial year ended 31st December 2019. Their market capitalization for subject company is around 28 million for subject company. For comparable 1 is around 1.08 billion. For comparable 2 is around 381 million, and for comparable 3 is around 184 million. The earning before interest, taxes, depreciation and amortization for subject EBITDA for subject company is around 100 million. For comparable 1 is around 28 million, and for comparable 2 is around 190 million. But for comparable 3, they gain a loss before interest, taxes, depreciation and amortization of amount 94 million. Now I will pass to the next presenter, Nur Izwani. Only mic.
Sazwani, where are you? Oh, Izwani. Izwani, not Syazwani. Okay, Izwani, continue.
My problem. Okay. Now I will explain about the summary of the financial report. We take from 2015 until 2019, as we can see on the screen right now. The summary of the income statement on 2019, the profit for the year is around 136 million. Next. For the summary of the balance sheet of the subject property for the total asset for non-current asset and the current asset is on 2019 is around 510. Next, for the total liability for the total liability for the subject property for non-current liability and current liability is around 451 million. And lastly, for the total equity is around 59 million. So the total equity and liability is same as the total asset is 510 million. Next, for the summary of the cash flow, for the operating activity on 2019 is around 903 million. And for the investing activity is around 994 million. Activity is negative 22 million. So at the end of the year, the cash and cash equivalent is around 1.9 billion. Next, I will pass to the next presenter, Huang, to explain about the common size analysis.
Thank you, Izwani. So I'm going to explain about the common size analysis of Biomaterial in Berhad. Okay. So as you can see that the profit before tax for Biomaterial industry for the last 5 years is negative 30%, while the industry data marks up a 38% of the profit before tax. Okay, there is a difference around 70% for the profit before tax between Materials in Berhad to the industrial data. Okay, so for the trade and other receivable for Biomaterial is around 0.61%, which is equivalent to the industrial data marks up with the 0.78%, but the inventories for Biomaterial Berhad is around 30% compared to the industrial data, which marked up with the 10%. Okay, next. So the share capital retained profits for Biomaterials Berhad is around negative 33%, and the industrial data marks up with the 17%, which is at a difference of around 50%. Okay, next. So there are 3 valuation approaches we use to value our subject company. The first one is asset approach. The second one is market approach, and the third one is the income approach. Okay, next. So for asset approach, we compare it using 3 aspects, which are account receivable, inventories, and also cash and liability. Okay, next. So for the account receivable, we use the account receivable divided by revenue to get the ratio for all 3 comparables, which are Claramin, Petra, and also the rich companies. Okay, so then we get the median of the comparables data, which is comparable one, 28.55% to compare with our subject property with 41.58% of a median of account receivable. Okay, next. So as I mentioned before, the industry median is around 28.55%, while our subject median is around 41.58%. So our normalized percentage is negative 13%. Okay, next. So same goes with inventories. The inventories, the data for the industrial median is around 3.39%, and for our subject property is around 5.72%. So the normalized percentage is at negative 2.34%. Okay, next one. So the last one, cash and liability, same goes in the same method before I mentioned just now. For industrial median of a cash and liabilities for is around 9.9%, and the subject median is around 5.4%. So the normalized percentage is around 4.5% for the cash and liabilities. Okay, next. So since the adjustment has been made by the comparables, so we use it to adjust inventories, trade and other receivable, and also cash and bank balance for the audited data. So we use it to get our normalization data for the all three aspects I mentioned just now. Okay, so next one. Other from that, all the aspects are under constant for audited data. Okay, next one. So we adjusted a negative 10% for the cash share capital because that the total equity plus total liability should be equal to our total asset value. So our fair market value of the company by using net asset approach is around 39 million ringgit Malaysia. Okay, so I'll pass to Faik to further explain about the other two methods.
Okay, thank you for Echi. Now I will explain about the next approach which is income approach. Okay, for the market analysis, as we can see here, the growth rate of future cash flow for the subject property, which is Biomaterials Berhad, the median growth rate is 3.66, and for the Karamin Petroleum Berhad, comparable one is 48.51, and the comparable to Petra Energy Berhad around 1.03%. And the last comparable tree is the Rich Energy Berhad, around 0.56. So the average growth rate is 2.34. And then as you can see here, the beta for the subject company is 2.25. The weighted average cost of capital around 5.32%. And the initial cash flow is 100 million, around 100 million. And the terminal or long-term growth rate is 2.50%. The growth rate is, as I mentioned just now, 2.34%. The firm value is 3.632 million. And so how to derive the firm value is by the DCF model, which is as you can see here, for the growth rate is 2.34, and the EBITDA is around 100 million ringgit. So the terminal value for the year 6 is around 4.2 billion. And as we use the PV, we got that around 3.16 billion, and the firm value is 3.632 billion ringgit. And to come up with the equity value is the firm value deduct by the debt value, around 451 million ringgit. So we got the equity value 3,180,933,568. So the NOSO for the subject company is 1.9 billion, and the intrinsic value is 1.67. To come out with this value, equity value divided by the NOSO, so got 1.6 value, and the market value is 0.015. So next, I'll go to the market approach. As you can see here, the market share price for the comparable one is 4.63, and the PE ratio is 93.76%. For the comparable 2, 6.7%. For the comparable 3, negative 1.02%. And for the PS ratio, for the comparable 1, 2.9, comparable 2, 0.66, comparable 3, 1.08. And for the EV EBITDA ratio, comparable 1 is negative 5.06, comparable 2, 1.7, and comparable 3, negative 2.11. So for the industry median and the subject company, to come out with the fair market value, the subject company use the industry median for the PE ratio negative 0.02. So the fair market value for the PE ratio is negative 1.56, 1,560,428 for the revenue. And for the PS ratio, the fair market value is 225,165,189 ringgit. For the EV EBITDA ratio is 13.67. The fair market value is 2,707,14,493. So the summary of value, as you can see here, the market approach, the total ratio, the three ratio here, and the income approach around 3.6 billion, 3,632,053,568, and the asset approach is 39,579 ringgit 141. So Biomaterial Berhad is an income generating company, so we had chose fair market value of income approach, and taking into the consideration of all the vitals and relevant factors, we are of the opinion of the market value is as below, 3,632. That's all.
Thank you to the group. Any question from the student? Mengapa student satu soalan pun tak tanya? Saya tolak markah semua student sebab tak tanya.
Guys, with regard your presentations, my first question is, what is the purpose of you collect a few years punya performance for the company and for the comparison? What is the reason behind presenting at least 3 to 5 years punya performance for both subject company and the comparable? Because if you look at the trend of your presentation for all groups, you letak dalam table your multiple years punya performance 2015, 2000. But when you do the analysis, you only highlighted the latest years, which is not correct. The reason why we look at the past 3 to 5 years performance is for us to know the trend of the performance for the company. By right, regardless whether it is common size analysis or whatever analysis you do for the company, you have to take into consideration all years punya performance to look at the trend, whether it is increasing, decreasing, or like a roller coaster. Because in doing business relations, sometimes we have to do some forecasting or some adjustment to the performance. So what is the purpose of you presenting the performance for 3 to 5 years, and then yet when you analyze the performance, you just take the latest one, which is defeat the purpose of apa ni tu. So that is the trend that I discovered from the first group until this current group lah yang who just presented. And then as far as the business valuation approaches is concerned, each of the approach has several methods that you can use in valuing the company. For instance, for income approach method, under income approach, you may want to choose the 3 available methods under income approach, which is DCF, capitalization of earning methods, or multiple of discretionary earnings. So in all of your presentation, you did not clarify which of the methods that you are using under different approaches. You just explain in general, in valuing the company, we are using these approaches. So of course, everybody knows that the 3 approaches, which is asset-based, market, and income approaches. But when you do your business relation, after you have decided what is the best approach to be used, you still need to choose what is the best method under the approach that you have chosen to be used in deriving the value of your company. I didn't see any of the groups highlighted. Let's say if they have chosen income approach, what is the method that they are using? Either discounted cash flow or capitalization of earnings or multiple discretionary of earnings. So you need to highlight because dia punya benda tu ada dalam situ. The basic principles of doing apa ni tu. Same with a market approach. Under market approach, you can use a comparison, ada apa-apa lagi. So same with asset approach. Under asset approach, there are 2 or 3 different methods that you can choose from. Because different methods may give you slightly different value. So from the methods under the specific approach that you have chosen, you utilize the data that you have collected for the past 3-4 years yang you buat analysis tu, yang common size analysis, whatever analysis tu. Because kalau like for instance like Pak Iqbal punya group tadi, when you do your common size analysis tu, you did not mention which year punya data that you are using for your common size analysis tu. Is it for 2015, 16, 17, 18, 19? Because in the earlier slide you presented that you have collected data for subject company and all your comparison tu, you ada 5 years punya performance. But when it comes to a common size analysis, you did not mention on which year punya data that you do your common size analysis. Is it the specific year or average punya ke atau macam mana? So you need to spell out. Macam ni kan, you have the data, the performance from 2015 up until 2019. By right, you should do CSA for each of the year ni, and then you can see the trend, whether it is increasing, decreasing, or like a roller coaster performance before you reach to the conclusion which approaches and methods that you are using. Because the determination of methods and approaches used for this ini based on the data yang you ada tu. From the data tu baru you decide nak guna market approach, apa method dia, income approach, apa method dia, DCF ke, capitalization of earnings ke, you nak multiple discretionary earnings ke, dari situ lah you decide. Yang tadi tu you general mention saja, oh income approach, so what method? Tak apalah, macam saya kata, ini introduction to business relation, still a lot to learn, tapi you need to aware dia punya apa ni tu. Saya tak ada lagi komen.
Okay, saya faham apa yang Cik Zul nak bagi tahu tu. Dia suruh you spell out. Kalau you guna DCF, memanglah bila kita tengok your calculation, kita tahu that is DCF. Tapi you kena mention, you mention you use DCF. Why you use DCF? Why not use capitalization approach? Capitalization approach lagi senang. Why you guna tu? Just spell out, just nyatakan. Like asset approach pun ada a few method yang you boleh guna. Mungkin you ada group yang guna 2 method, ada group yang guna 1 method. So you just inform us why you only use 1 method. Why if you use 2 method, why you use 2 method?
You kena ingat apa yang I bagi tahu you first year dulu. Bila you buat assignment, you kena assume examiners yang nak baca you punya report tu know nothing about business relation. So it is your task to explain to the examiner. But bila detail everything baru you layak dapat A apa semua. Tapi kalau orang tertanya-tanya, apa ni, so dia takkan dapat A. So bila kita jawab assignment, kita jawab soalan test ke exam ke, kita punya task is to explain as detailed as possible to the examiner, to the reader, to the audience, apa tentang benda tu. Baru dia dapat A.
Memanglah kalau you present dekat lecturer tahu kan. Tapi tak boleh lah, you tak boleh assume your audience tahu apa yang you buat. You kena ceritakan semua. You have to spell out. Okay. Ada question tak daripada student? Ada student? Okay, I rasakan you all ni semua I tolak markah lah sebab tak ada soalan daripada student. By the way, lagi satu, I minta peer assessment form. Ada student yang tak bagi peer assessment form. Mengapa? You suka I tolak markah you all. Okay, please. So afterwards, I akan buka lagi satu link supaya you boleh submit you punya presentation slide dan juga peer assessment form. Ya. Kali ni mesti hantar. Yang belum hantar, please submit. Ya. Okay.
Doctor, for those have submitted before, need to resubmit again?
No need. No need.
Okay.
Yeah.
Thank you,
for those who haven't submit. Yeah.
For groups which will be presenting on Wednesday morning, I hope that you take into consideration all the comments that we have made during today's session and try to improve your slide presentation for the other 5 groups who will be presenting on Wednesday morning.
Zul, because there are going to be 5 groups on Wednesday, can we start early, like 8:30? Boleh tak?
I have no problem.
No problem. So,
I okay je. Students lah takut tak bangun pagi lagi.
Sebab 11 they have ada kelas. So kita tak boleh ambil masa ke belakang. So kita cepatkan. Boleh kan? Boleh tak?
Boleh.
Ada yang senyum-senyum tu tak
Boleh.
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 Boleh ya? Boleh. I kesian dekat kawan you, Melissa, kesian. Rumah dia banjir tu. Sebab tu I benarkan dia present lambat sikit. 2 hari lagi ya. So kalau tak ada apa-apa, please take into consideration all our comments and improve your presentation for the 5 groups yang akan present.
Okay, I need to remind